Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Uflex Limited, a stock for which a lot of requests had come in to make a video. So here it is. Can one invest into this stock or should one avoid it? So let's get started. First of all, a disclaimer that this is not a stock recommendation and people taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Uflex Limited, here's a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel. It will help you also ask me questions on a daily basis. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts that I put up from time to time. Now about the company, Uflex Limited was established in 1983 and it is India's largest flexible packaging company. Provides packaging films, flexible packaging, liquid packaging, chemicals, engineering, etc. Have global presence with businesses in USA, Canada, South America, UK, Europe, Russia, the CIS nations, in the African region, and also in the Middle East and South Asian countries. So it is spread across the world categorically, with a lot of offices in all the five continents. Market cap of the company is around 1400 crores. If you look at the numbers, then sales were up by around 17% in the December quarter, which augurs well for the company in this pandemic that it is doing so well. And look at the profit number. Profit was up 88% year on year. Dividend, it doesn't pay out now. That's very interesting. But it is doing expansion and working globally. Return on equity of 7.6%, operating profit margin of 15% is nothing great to write home about, but still it is decent enough. Promoter and institutional holding is pretty good with 18% free float. It looks a very strong company in that regard. If you look at the performance, then stock is up around three times from the March 2020 low. So it has already gone up three times. But then there are stocks like Dixon went up four and a half, five times. There are other stocks that have gone up 8, 10 times, 20 times. So it's not that it has done extraordinary well. Although if you look at in the realms of around 20 years, yes, the company has done extremely well to be up 3x in a year. Numbers have remained decent, and this was the you can say this is what people expected who have bought into the stock in April and May, and numbers have come out very good. Things should get better once environment normalize. So it really depends on how things pans out with the pandemic and with the cases, etc. If things go on the wrong hand, then we could see a decline in the stock. Otherwise, if things stabilize here and gets better in April and May, we could see the numbers getting better for Uflex. Otherwise, there will be a sell-off in the stock because it has already risen around three and a half times. Return ratios are average, and this is one thing why I probably stay away from this company, because you can look at many companies. There are hundreds of companies with return on equity of more than 20%, which in my opinion would be better to invest into rather than companies with single digit ROEs. Valuations are still attractive, not extremely expensive, but crude prices is a worry. If crude prices keep rising, then that's a major ingredient or major raw material for the company. So you need to keep an eye on that. Valuations in terms of FY22 and 23 is not that expensive, but again, I'm telling you, if things doesn't go the right way with respect to what is happening here in India, then the valuations will look expensive, because on FY22 basis it is expensive. Sorry, FY21 basis it is expensive, but on a 1 year forward, 2 year forward basis, people are penciling in 30 to 40% growth on nifty companies. So you can imagine what will happen or what could be the assessment for companies which are in the small or mid cap region. If you look at the technicals of the stock, then there is strong support around the 300 320 levels, and the breakout is expected above 420 450. So probably you need to wait for a major breakout or major up move if you want to trade into the stock. If you want to invest, wait for major downfalls, major corrections. Wait for days like we have had in the last 1 week, 10 days, when markets just go down further, 14,300, 200. Maybe even if you get it at 14,000 nifty, that will be better. What I want to state here is, in most of the mid and small caps, if you want to trade now after a move for about 6 months, a relentless move for 6 8 months, wait for support levels to be tested. Wait for companies to, or stocks to decline to support levels, and then get into those stocks, rather than just buying here, there, everywhere and thinking that you'll make money in a couple of months. That phase is over, and now we are in a phase where good quality companies at reasonable prices will keep going up, and that's where you need assessment and you need to understand as to how things are working. Even technically speaking, stocks do come back to 50-day, 100-day moving averages, and good quality stocks around those moving averages are better to buy at. There's more margin of safety rather than buying immediately. So that's the thing. So just to tell you an example, Dixon Technologies, and I have a trading position in it. So it went from say X split. So it went from something like 3,400, 500, 3,200 or so, all the way to 4,480, 4,460 in one go. And at that point of time, everybody was asking me as to what needs to be done. And we waited for it, and we have seen the stock fall nosedive in the last 2 weeks, and now it is stabilizing at these levels. So that is the way you need to wait for stocks to decline. You look at IT stocks, they have corrected over the last 1 month, 2 months, I think at least between 4 to 6 weeks they have corrected, and now they are making a move. So that is where, and the pharmaceutical space for the last 3 4 months have not done anything, and now they are making a move after moving averages have been touched. So on technical grounds, you need to respect where the stock is, and you need to wait for major declines in that manner to get into the stocks rather than buying immediately. So just have an understanding of it. Data is available everywhere free here in India, and you're lucky in that respect, because in US, etc., they you need to pay for that sort of a data. And once you do that, you'll be able to uh, reasonably make an assessment as to how the stock is going to behave going forward on a short term basis. On a long term basis, this is a very good quality stock. On major declines, on very bad red days in the mid and small caps, just start accumulating this stock. So what needs to be done? If you have it, then average at these levels and average at lower levels also. Probably do not buy afresh, as I explained. If the market really nosedives, that is the time to really get into it. Right now, the small and mid cap index has risen a lot over the last 6 8 months, leave alone last 1 year. Packaging companies may be hurt from steep oil prices, so you have to take that into consideration. This will come out and pinch them in the March quarter or maybe in the June quarter. So wait for the numbers there, because if the declines happen, that would be the opportunity to get into the stock. So this was my video on uflex. Please like and subscribe my channel and hit the bell icon so you can get my videos straight away when I post it. Thanks a lot for watching.